Hello again, welcome to another episode of the Uranium Market Minute. Today is Thursday, May 26th, and this is episode number 130. My name is Justin Huhn. I am your host and the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing in this podcast that you see or hear is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right, looking like a decent day in the markets today. It's looking like we're seeing a bit of a follow through on this uptrend. Is this a renewed uptrend for the markets for uranium, or is this a counter trend rally? Is this a bull trap? We will have to see what kind of follow through we get tomorrow and into next week. Tomorrow, of course, is Friday, is the last trading day of the week, and we have a 3-day weekend in the American markets, with Monday being Memorial Day. So will we see if risk is again taken off the table on a Friday, especially going into a long weekend? That has been the case for most Fridays this year, although it seems like the fear is dissipating a bit here. We do have QT beginning next week. How much of that has been factored in and priced into the markets as a discounting mechanism? I don't know. I think to some extent it has, to some extent it hasn't. We should see some effects on liquidity. However, it does look promising in terms of this recovery. And as we noted, the week, early part of last week, during that deep downdraft when everything was extremely oversold, and when the URNM relative to the S&P did make that undercut low to that trend line. We're going to review that chart in just a moment here. That was the bottom. And at least in the short term, will we see further downside? I don't know. It definitely is looking like we have at least a mild recession on our hands. The numbers are coming in week over week. That looks like that's the case. But that also means that we likely have seen, at least in the short term, potentially a peak in inflation. Will that lead to the Fed pivoting? These are all speculations that everybody seems to be making right now, and it's impossible. Nobody has a crystal ball. And to guess on what the Fed is or isn't going to do is a difficult way to trade in these types of choppy markets. So on that hand, we tend to focus on the fundamentals. And of course, in this case, for the uranium sector, they are mind-blowingly positive. And it's nice to see that follow through today. So let's look at the charts in just a moment. But first, we're going to run through the daily scoreboard. SPUT actually did raise some money yesterday. We got the spot price sitting at 46.87 a pound mid-market. That's unchanged from yesterday. Did see a bit of trading up and down in the price throughout the day today, but landed back at the same price. After being out of the market for 4 to 5 weeks, SPUT, they did raise 7.7 million in new money yesterday. Did not buy any additional pounds. We have yet to see any volume to speak of coming into the SPUT vehicle. To me, that means risk is still off. Let's see, they're sitting on now 31.5 million in cash. Yet to see if they are going to expend any of that cash to buy any more uranium, maybe another 100,000 pounds. We will see. ETFs, no change in outstanding shares for either URA or URNM. And we have some ETF news in the mailbag section. First, let's look at the charts. URA up nicely today, 2.64% on the day, closing near the highs of the day. Volume ticking up a bit. That's a positive sign. We did kind of break out of this rising wedge for URA. And I'm going to show you in just a second. We broke out to the upside of that rising wedge in Cameco. I was expecting a downside move, but risk was on across the markets, and risk was on in Cameco and in the rest of the uranium market as well. So for now, we continue this low volume melt up. Now it's nice to see the volume tick up a bit here in URA. Still nothing to write home about. URNM, very similar chart, volume ticking up slightly as well. That's good to see. Broke above the highs from last week. That's also good to see. Closed near the highs of the day. And if we look at this URNM relative to the S&P, we are holding very well that trend line that we made that undercut low for a single day. That was the beginning of last week. Now we continue to move up in this relative performance to the broad market. Positive, definitely positive to see. And even on a very good day for the SPUs, we outperformed it in this basket of uranium miners, also known as URNM, or the Sprott Uranium Miners ETF. Cameco also closing pretty close to the highs on the day, breaking above that rising wedge. Not seeing follow through on volume for Cameco. Cameco is one of the very few vehicles that institutional money can go after. So in my opinion, risk is still off here, even though we are seeing this counter trend rally. Let's look at the Sprott Physical Uranium Trust. Again, volume, just nothing is happening here. This is if this was an EKG of this chart right now, it would be flatlining, just like that red line running across the screen at 14.99, where it closed today, up 0.27%, with uranium flat. I don't think we are at a significant enough premium to raise money today. If so, it happened for a brief moment. Probably did not raise much, if any at all. So what does this mean? Volume with the setup as it is for uranium, extremely positive, with SPUT being right on the cusp of being at a sufficient premium to NAV to raise cash. Seems like a ripe opportunity for new money to come in and take advantage of it. That new money is not there. Risk is still off, in my opinion. Does that mean I think we're headed lower? Not necessarily. It just means we are not doing cartwheels in the streets. I'm not convinced that we are out of the woods yet, but either way, we are holding up here. The spot price is holding relatively well in the high 40s here, with very, very little volume trading there. Very little buying pressure happening in the spot market, and the price is holding up. This is a good sign. All right, so let's go to the mailbag section here. Somebody asked me a question about news about URNM being listed in Australia. Yes, you heard that correct. This is going to be the Australia's beta shares. They are launching a global uranium miners ETF. It will have the same ticker, URNM. Why will it have the same ticker? They licensed the index that Tim Rotolo from North Shore created. So it's going to have the same holdings, the same weightings as the now Sprott Uranium Miners ETF that we have in the US, that we have in the UK, and now it's going to be on the ASX. What does that mean? More flywheel. I'm very pleased to see that. And it's great to see the uranium investment thesis being able to offer exposure to different jurisdictions and different markets. Now we have URA and URNM going in London. We had URM launch, I believe it was on the Frankfurt exchange as well. Now URNM on the ASX. Then we have the ANU Energy Physical Uranium Fund being launched in the East. I apologize, I'm forgetting the exchange that is going to be on or is on currently, but we have physical uranium allocated for investors in London, in Canada, in the US through the OTC, and through U.U on the TSX. And then now we have the ANU in the East. Then we have the ETFs across these, all of these major markets. This is very good to see. More flywheel is coming. So this setup continues to just build on itself. And all we have to do is get through this risk off period. I know that can be difficult to weather these markets. I mean, even though we've got from the lows of last week, some of these stocks are up 20 to 30%. And so these definitely can be traded if you can snag those lows and snag those highs. But if you hold through that volatility, and if you are in the US, holding through that does not reset your capital gains clock. If you happen to have entered those positions within the last 12 months, you exit those and you are at short-term capital gains, which is essentially your tax rate. You can hang on beyond that 12 months. You stay in the long-term capital gains market. So unless you are trading very precisely on those highs and lows, it can be difficult to come out on top, which is why we tend to hold and add on weakness when we can. Either way, up nicely over the last 7 or 8 trading days. Very good to see, but still the volume is lacking. We'll have to see how the week closes out. Will investors be taking risk off the market, off of their positions before going into the long weekend? We will have to see tomorrow. And on that note, I will see you tomorrow. If you are a Uranium Insider Pro member, you will receive our June monthly newsletter on Thursday, the 2nd. That is a week from today. We always release the newsletter on the 2nd trading day of the month, so we can aggregate all of the month-end data with sufficient time to put it in this letter. These letters are very thorough, 30 to 40 pages, typically deep into the macro. And of course, we cover all the companies we own and recommend. If you are not a member and you'd like to see a sample piece of our content from a previous month's newsletter, click the link in the description below. You'll have access to that. You can get a taste of the type of content we put out. And of course, if you want to give us a trial run, we do offer quarterly subscriptions that, of course, are discounted to the annual membership. So feel free to check out our content for free by clicking that link below. And I will see you all tomorrow. Have a great night. Cheers.